gold prices in India crossed the 73,000 mark.
23 million ounces added to India's gold imports.
I propose to reduce customs duties on gold and silver to 6%.
So today I'm going to tell you all a story, or maybe discuss a story with you all. And the story is about something that is found at all our households basically. Whether it's in our bank lockers or the lockers at home, or whether we are wearing it on a daily basis, especially the women out there. So today we are going to talk about gold. India has had a long love affair with gold. It's not just an investment or an asset. It has emotional resonance for many Indians. It's an investment, it's an aspiration, it's an insurance policy, all at the same time. From celebrations, festivals to ceremonies, gold is a big part of the Indian way of life. This shows up in the numbers as well. After real estate, gold is the second biggest asset held by Indian households. While it's hard to know the exact amount of gold Indians hold, the best estimate we have is that Indian households may be sitting on 25,000 tons of gold worth rupees 1.6 lakh crores. Based on all the noise about mutual funds and SIPs, if you thought mutual funds must be popular in India, you couldn't be more wrong. Mutual funds and equities are just about 2 to 4% of the Indian household savings. Now, the reason why I'm talking about this is because gold has been one of the best performing asset classes this year, despite the fall after the budget. The government's decision to cut customs duty and the increased tax attractiveness of gold ETFs will probably increase gold demand, especially for jewelry. So in this video, I want to talk about the jewelry sector. India is one of the world's largest consumers of gold jewelry, accounting for around 28% of the global demand in 2022. The jewelry sector in India has also seen a major shift towards formalization. From visiting their local jewelers, people are now gravitating towards the organized market. In the early 2000s, these unorganized players accounted for about 95% of the market. However, this figure has decreased to around 64% today, indicating a significant shift towards organized retail. Regulation of India's jewelry industry has made strides in building consumer trust. Hallmarking, which certifies the purity of gold, was made mandatory in 2020 to build trust and transparency in the market. Also, a major catalyst for this change has been Tanishq, a Titan brand which revolutionized the jewelry shopping experience. But more about it later. Because today, in this more exciting than ever gold jewelry market, there's been a new entrant. Aditya Birla Group, one of India's largest conglomerates, is diving headfirst into this dazzling industry, aiming to transform it forever. With an investment of rupees 5,000 crores in its new brand called Indriya, the group aims to capture a share of a market valued at over 6 lakh crores and become one of the top 3 jewelry retailers in the country within 5 years. But what does that mean for the jewelry landscape in India? Well, let's explore. Let's pick up from where we left before. Tanishq's role in transformation. Now, Tanishq introduced the carat meter, a device that allows customers to verify the purity of gold jewelry. This innovation built trust amongst consumers who previously relied heavily on local jewelers. As a result, the organized market now accounts for over 35% of the total jewelry market, with revenues growing at a compounded annual growth rate of 8% over the past 5 years. So now, why is the Aditya Birla Group entering the jewelry business? For starters, it's a natural extension for a conglomerate that has been involved in fashion, retail and lifestyle for over 2 decades. Currently, about 20% of the group's revenue comes from consumer businesses, including lifestyle, retail and financial services. In financial year 24 alone, these sectors brought in a hefty 1 lakh crore, and the group aims to double this number over the next 5 years.
Our conviction about the size of the opportunity here is matched by the size of our bet. We're investing 5,000 crores over the next 2 years in this business to ramp up nationally. This represents an unmatched equity infusion in this space. We will be among the top 3 national jewelry retailers over the next 5 years, and will continue to grow at a CAGR of 50%.
So then what are their ambitious plans for Indriya? Well, they plan to expand over 10 cities in 6 months, feature 15,000 curated pieces, 5,000 exclusive designs, new collections every 45 days, and much more. But well, the competition around for Indriya is something to look at. The journey for Aditya Birla Group into the jewelry market won't be all easy. It intensifies the competition, particularly against the established players like Tanishq, Reliance Jewels, and Kalyan Jewelers, because jewelry buying is all about trust. Once customers find a jeweler they trust, switching to another brand isn't easy. This substitution risk makes it tough for new players like Indriya to build a loyal customer base. Well, that is about Aditya Birla and its Indriya. Now let's try to understand the market dynamics and consumer preferences to further understand the current landscape. So the jewelry market in India is characterized by several key factors. One of them is the high gold consumption. India is one of the largest consumers of gold, with 60 to 65% of imported gold used for jewelry and recycled gold contributing 20% of the consumption. Let's also look at the bridal jewelry demand, because bridal jewelry constitutes a significant 55% of the total demand, with bangles and chains accounting for 60 to 70% of the sales. And if we look at the seasonal demand for gold, then jewelry demand peaks during wedding seasons and festivals like Diwali and Akshaya Tritiya. Even agricultural output and monsoon patterns influence gold demand too in Tier 2 and Tier 3 towns. Let's understand the rural demand a little better, because despite better access to bank accounts in rural areas, gold still remains the main investment choice. Around 55 to 58% of the demand comes from rural India. Well, now that was about the rural demand. Let's zoom out a bit and understand the Indian demand trends in comparison with the global ones. According to the World Gold Council's report for quarter 2 of 2024, total gold demand, including over-the-counter investment, reached above 1,200 tons, marking a 4% year-on-year increase. Now, this is the highest quarter 2 demand recorded since 2000. However, the jewelry consumption specifically saw a 19% decline year-on-year, falling to somewhere around 390 tons, the lowest in 4 years. Now, when we talk about gold, except for the household activity, there's another important element to look at, which is the central bank activity. Central banks' gold holdings are a part of their overall reserves, which also include foreign currency, especially the US dollar, the world's leading reserve currency. Interestingly, central banks continue to be significant players in the gold market, with net purchases increasing by 6% year-on-year to over 180 tons. They are actively diversifying their foreign exchange reserves by increasing their holdings of gold. Now, this strategic shift aims to reduce reliance on traditional reserve currencies such as the US dollar and mitigate associated risks with it. With mounting concerns over rising inflationary pressures too, central banks view gold as a reliable hedge against currency depreciation and inflation. So, gold's intrinsic value and limited supply made it an attractive asset for preserving purchasing power in terms of economic uncertainty. Now, before we wrap up, let's again zoom in a bit and look at what the opportunities for Aditya Birla's Indriya are in the current economic context. The timing of Aditya Birla's venture aligns with recent budget announcements, including a reduction in customs duty on gold from 15% to 6%. This price drop could lead to a surge in demand for gold, especially with the festive season approaching. And well, that is all about the gold jewelry market in India and about what the landscape for Indriya looks like. But stay tuned for more in-depth stories with Markets by Zerodha.